It's no secret home prices are rising all across the state of Texas. Part of it is because the population is booming. The more people moving to Texas, the higher the demand for homes and apartments. And the higher the demand, the higher the prices.
Officials to just everyday Texans, just how much harder it is becoming to find an affordable place to live.
The Texas housing market is spiraling into something even worse than the 2008 crash. In just 2 years, Austin home values have already dropped nearly 19%, and across Dallas, Houston, and San Antonio, the cracks are spreading fast. Inventory is exploding, sellers are slashing prices, and buyers suddenly hold all the power. But here's the dangerous part. This isn't slowing down. The data shows we're only in the early stages of a correction that could drag well into 2026. In this video, I'll take you inside the hidden numbers the media won't show you. Watch until the end, because what's coming next could impact every Texas homeowner and investor. Austin, the epicenter of destruction. Ground zero of the Texas housing apocalypse sits in the heart of the tech capital. What was once called Baby San Jose is now a buyer's bloodbath. The numbers are staggering. Home prices down negative 3% year over year in May 2025. That 18.5% drop from the May 2022 peak isn't slowing down, it's accelerating. Team Price Real Estate has developed a crash methodology based on 25 years of Austin data. They track two critical indicators: the new listing to pending ratio and the median sold price decline. When the ratio drops below 0.6 for 3 consecutive months and prices fall 20% from peak, that's officially a crash. Here's the terrifying part. Austin's new listing to pending ratio hit 0.58 in May, just 1 month under the warning threshold. If this continues for 2 more months, Austin will officially be declared in housing market crash territory. But the bleeding isn't stopping at city limits. Travis County saw home listings jump 12.2% year over year. Williamson County exploded 16% higher. And Hayes County, a devastating 24.7% surge in available homes. Reventure app gave Austin a home price score of 34 out of 100. Unless something dramatic changes, Austin is becoming what analysts call a complete buyer's market. Dallas-Fort Worth, the financial fortress, crumbles. The economic powerhouse of Texas is showing cracks in its foundation. Dallas-Fort Worth closed 19,668 home sales in Q1 2025, still the highest volume in Texas. But don't let that fool you. Beneath the surface, a financial earthquake is building. Inventory pressure has pushed Dallas home prices lower for 3 consecutive months. The median sale price hit $426,000 in December. And here's what's scary. Homes are taking 56 days to sell compared to just 40 days last year. That's a 40% increase in time on market. Realtor.com reported that median listing prices in Dallas dropped 9.1% year over year. When listing prices fall that fast, sellers are panicking. They're slashing prices to attract any buyer willing to step into this market. Levi Rogers from VA Loan Network put it bluntly. In Dallas, affordability is becoming a serious concern. High home prices, paired with the current high rates, are leading to fewer buyers in the market. This could result in a price correction over the next 12 months. Building permits in Dallas fell 5.4% in September, and single-family home starts crashed 8.8%. When builders stop building in Texas, you know the market is broken. If you want to stay ahead of this crash as it unfolds, hit that subscribe button right now, because the numbers we're about to cover are only getting worse. Houston, the energy capital's nightmare. The space city is facing a crisis that reaches far beyond real estate. Oil prices have collapsed to $57 per barrel, a level that forces local operators to shut down production. When oil goes down, Houston goes down. It's that simple. And with it goes the housing market. Houston closed 18,696 home sales in Q1, making it the second largest market in Texas. But that volume is misleading. The Federal Housing Finance Agency reported Houston area home prices growing at just 2.3% year over year. The only major Texas metro still in positive territory. Don't celebrate yet. Nick Gurley from Reventure app predicts this won't last. I could see a 15 to 20% correction in the cards, especially if there is a recession in the oil industry. As many local operators shut down production when oil gets that cheap, which then has a knock-on effect on local employment and home prices, especially in markets like Houston and San Antonio. The warning signs are everywhere. New home construction permits declined 1.2% in September. When Houston stops building, it means developers see something coming that buyers don't. Marco Santarelli from Narada Real Estate Investments warns that Houston's interconnected energy economy makes it vulnerable to rapid corrections. When oil prices drop, it creates a domino effect through employment, wages, and ultimately housing demand. San Antonio, the medical hub's diagnosis. The Alamo City is under siege, and this time, there's no cavalry coming. San Antonio closed 7,351 home sales in Q1, ranking third in Texas. But volume doesn't tell the story. Price action does. The median sale price hit $265,750 in December, up just 0.3% from the previous year. That's essentially flat. More alarming, homes are taking 67 days to sell compared to 54 days last year. That's a 24% increase in time on market. When properties sit unsold for over 2 months in Texas, buyers have all the power. The Federal Housing Finance Agency data shows San Antonio home prices in negative territory at minus 0.2% year over year. It's already crossed into decline mode, and the momentum is building. Realtor.com reported 15,178 homes for sale in December, with the median listing price down 3% year over year. San Antonio has officially become what industry experts call another buyer's market. Reventure App's analysis shows that San Antonio, along with Austin and Dallas, is now classified as at risk for significant price declines throughout 2025. Building permits actually increased 1.2% in September, making San Antonio the only major Texas metro still adding supply. That's not good news when demand is evaporating. The inventory avalanche. The supply numbers are absolutely terrifying. Total active inventory across Texas reached 132,140 homes at the end of March 2025. To put that in perspective, this level of inventory hasn't been seen since the 2007 to 2008 housing crash. But here's the kicker. The current rate of inventory growth is nearly double that of the Great Financial Crisis buildup. Back then, foreclosures flooded the market and demand collapsed. Today, it's new construction and resale homes hitting the market simultaneously while buyers stay on the sidelines. New listings surged 16.2% year over year in March, following increases of 6.4% in February and 17.1% in January. First quarter new listings jumped 13.3% above 2024 levels. The Texas Real Estate Research Center reports that March and Q1 new listings surpassed pre-pandemic levels by approximately 22%. When supply growth outpaces demand this dramatically, prices have nowhere to go but down. Nick Gurley's analysis shows listings hit 123,000 in April of 2025, 53% higher than normal. That's not a market adjustment, that's a market collapse. Entry-level homes are leading the surge in inventory growth. This means first-time buyers, already struggling with high mortgage rates, now face an oversupplied market where their purchasing power means less than ever. The price-cutting bloodbath. Sellers are slashing prices like their financial lives depend on it. In May 2025, 65.7% of closed sales included price cuts of $5,000 or more, with a median reduction of $11,500. When 2/3 of all sales require price cuts, the market isn't functioning. It's failing. Price cuts in Q1 2025 accelerated compared to 2023 and 2024, reaching their highest levels since 2011. 2011 was marked by widespread foreclosures and a sharp decline in housing activity. We're seeing the same patterns today. The Federal Housing Finance Agency data shows Texas house prices declining from 2.7% to 1.7% year over year. Austin and San Antonio are both in negative territory at minus 0.9% and minus 0.2% respectively. Days on market reached 32 days in May, an increase of 23.1% from the previous year. When homes take longer to sell, sellers panic and cut deeper. It's a vicious cycle that feeds on itself. Chen Zhao, an economist at Redfin, told Newsweek, buyers in the weaker Sunbelt markets such as Florida and Texas may be able to negotiate the best deal and have the most selection this year. When Redfin economists start calling Texas a weaker market, you know the perception has completely shifted. The mortgage rate death spiral. The Federal Reserve has created a perfect storm of destruction. Chairman Jerome Powell recently opened the door to rate cuts after months of hawkish rhetoric. But here's the problem. Mortgage rates are still hovering between 6.75 and 7%. The Mortgage Bankers Association forecasts rates staying above 6.5% throughout 2025. The lock-in effect is devastating. Realtor.com estimates that 82% of homeowners with mortgages have rates below 6%. As of early 2025, that number has dropped to 75%, but it's still keeping millions of potential sellers trapped in their homes. When existing homeowners can't or won't sell because they're locked into ultra-low rates, the entire market depends on new construction and desperate sellers. That's exactly what's happening in Texas right now. The Federal Reserve's latest decision to hold interest rates steady at 4.25 to 4.5% means mortgage rates will remain elevated throughout spring 2025 and likely beyond. There's no relief coming from borrowing costs. Berkshire Hathaway Home Services predicts mortgage rates will stay in the mid-6% range through the end of 2025. Their analysis shows that the impasse between rates and affordability will continue, causing home price growth to slow down. But in Texas, prices aren't just slowing, they're reversing. The demographic time bomb. The population boom that built Texas is reversing. Texas experienced massive in-migration during the pandemic, attracting new residents with promises of affordability, space, and lower taxes. In 2022, net domestic migration brought 222,000 new residents to the state. But as population growth slowed and high mortgage rates locked out potential buyers, the increased supply outpaced demand. The result is downward pressure on prices in every major metropolitan area. Nick Gerley argues the housing inventory increase is fueled by three critical factors: a wave of resale of newly constructed homes, a decline in migration into the state, and a growing number of locals being priced out of the market. Here's what's truly terrifying. Warren Buffett's Berkshire Hathaway warns that when baby boomers finally decide to relocate for retirement and sell their homes en masse, it will worsen the housing affordability crisis for younger generations. As boomers sell their homes and purchase smaller homes with cash, they are inadvertently making it harder for first-time and lower-income homebuyers to compete, according to their analysis. Millennials and Gen Z will need to compete for homes with senior baby boomers, Gen Xers approaching retirement, and institutional investors like Blackstone, which owns upwards of 60,000 residential single-family homes. The demographic math doesn't work. Too many sellers, not enough qualified buyers. The builder's dilemma. Construction companies are caught in a death trap. Texas home builders anticipate constructing 1.1 million new homes this year, signaling an almost 14% increase from 2024. But here's the insane part. They're building into a market where demand is evaporating. The National Association of Home Builders reported that new home sales declined 13.7% in May, due to sustained high interest rates and economic unpredictability. With inventory increasing, 37% of builders have reduced prices. Single-family home starts reversed their upward climb since July with a 2.7% decrease. Dallas felt the sharpest sting, with single-family starts falling 8.8%, followed by Houston at 3.7% and Austin at 1.6%. Building permits fell across the board. Dallas down 5.4%, Austin decreased 3.4%, and Houston saw a 1.2% decline. When builders stop getting permits, it means they see a crash coming. The industry is taking a different approach, building smaller, more affordable homes to appeal to first-time buyers. This mirrors the 1980s housing market crisis, when mortgage rates hit a record high of 18% in 1981. But here's the cruel irony. Even building smaller, cheaper homes won't help if nobody can afford the mortgage payments at 7% interest rates. The foreclosure. Tsunami. Distressed properties are about to flood Texas markets. Auction sellers expect both foreclosure starts and completed foreclosure auctions to increase in 2025. This means more inventory is coming to a market that's already drowning in supply. Rebecca Sequeira from Arnell Homes, who purchases distressed properties in the Cincinnati area, told Auction.com, "I am anticipating more. Distressed properties will be coming available, and I'm looking for better deals since rehab costs are increasing." The bidding behavior on Auction.com shows that local community developer buyers had already adjusted their strategies in late 2024, anticipating a retail housing slowdown in early 2025. After peaking at a nearly 3-year high in May 2024, the foreclosure auction sales rate steadily declined through November. This sales rate indicates how much volume buyers are willing to purchase at available price points. The bid-ask spread between what buyers are willing to pay and what sellers accept at foreclosure auction is widening. Combined with expected rising foreclosure inventory, this could force sellers to lower pricing dramatically. In Texas specifically, the combination of oversupply, high interest rates, and economic uncertainty in the oil sector creates perfect conditions for foreclosure increases. Warren Buffett's famous advice, to be fearful when others are greedy and greedy when others are fearful, is playing out in real time as savvy investors position for distressed property purchases. The economic multiplier effect. The housing crash is spreading beyond real estate. The Texas Economic Outlook from September 2025 shows employment rebounded in July after declining in June, but the recovery is fragile. Survey data from the Federal Reserve Bank of Dallas shows improvements in hiring outlook, but these gains could evaporate quickly if housing construction collapses. When housing markets crash, the ripple effects devastate entire economies. Construction workers lose jobs. Real estate agents see commissions disappear. Home improvement retailers face declining sales. Mortgage brokers and title companies see volume evaporate. In Texas, where real estate and construction represent significant portions of the economy, a housing crash creates unemployment that feeds back into more housing distress. It's a vicious cycle that accelerates once it starts. The Federal Reserve's concern is growing. In their latest meeting minutes, a few participants noted a weakening in housing demand, with increased availability of homes for sale and falling house prices. When Fed officials start expressing concern about falling house prices, it means the problem is bigger than most people realize. They have access to data and analysis that hasn't reached public markets yet. Capital markets remained mostly flat throughout August as investors awaited information on economic conditions. Long-term interest rates fell slightly, but this hasn't translated to relief in mortgage markets. The possibility of disruptions in global capital flows as foreign investors reassess U.S. investment risk raises concerns that interest rates might increase further. The Texas housing market crash of 2025 is no longer speculation, it's unfolding now. Austin home prices have dropped 18.5% from their peak. Dallas is seeing inventory surge, Houston is weighed down by oil sector challenges, and San Antonio is already in negative territory. Statewide, inventory is 53% above normal levels. Analyst Nick Gurley forecasts another 4% decline in Texas prices over the next year, with oil-heavy regions facing potential corrections of 15 to 20%. Even then, homes could remain 10 to 12% overvalued by the end of 2025, suggesting that the downturn may drag into 2026. For buyers, this may be the best window in more than a decade. Redfin's Chen Zhao notes that weaker Sunbelt markets, especially Texas, offer the most room for negotiation and the broadest selection. Sellers, however, face tough choices. 65.7% of homes already require price cuts, a figure climbing month after month. Investors are watching closely. Warren Buffett's recent bets on home builders D.R. Horton and Lennar show confidence in a long-term rebound, but his horizon likely stretches years, not months. Renters may eventually benefit as investors snap up distressed properties for conversion, though high mortgage rates limit immediate relief. The bottom line, Texas real estate, once a pandemic-era magnet, is now mired in oversupply, rising rates, demographic shifts, and economic uncertainty. This is not just a Texas problem, it's a warning signal for overheated markets nationwide. The Texas housing crash is only getting started, and the numbers don't lie. If you want to stay ahead of every move, hit subscribe and turn on notifications. I'll keep you updated as the story unfolds.